So this is E11-20. This is actually one of your homework problems, but I felt like it was such a good problem that I'm going to go through it. So those of you who are actually being diligent and watching these videos are going to benefit because you'll have a really good insight into doing this homework problem. The numbers are going to be different for when you actually do it, but hopefully if you pay attention here, you should be able to do the calculations on your own, and it should be kind of a free problem for you. Okay, so let's get started. We basically have a payroll register here. We have, it looks like, 5 employees, and we're going to be calculating all their different payrolls and all the different withholding amounts and getting their net pay. So I think this is a really good problem because if you work as an accountant somewhere or you have your own business, you might encounter doing similar calculations for your payroll. So let's start with the earnings here. So basically the ending cumulative earnings is basically this beginning plus the current period. So this is pretty easy. I'm going to do the math really quickly. So again, you see 83,000 plus 4,300 is 87,300. So I'm just doing that same calculation for each of these rows. So one thing to notice is that we have a new employee here. They had 0 beginning balance and they just have this first 5,500. So this is their first pay period. So little things like that you should notice because that's going to affect some of these calculations. Okay, so let's move on. So let's open some of this stuff up because I think we're going to need, no, not that. Okay, so let's take a look at our employment tax rates here. So it looks like OASDI is 6.2% for employer and employee on the first 117,000. And then we have Medicare up to 200,000, and another rate for anything above. The employer also has to pay some unemployment tax. So let's begin just with the OASDI. So let's just calculate the amounts. I'm just going to set up a little table here. Okay, so one thing is that we have to keep track of which of these cumulative earnings have exceeded the max. So the max is 117,000. So basically we see here that this employee is over the limit. So we're going to have to do a custom calculation for this OASDI because it's we can't just calculate the percentage off of this cumulative. It has to be on just the amount of pay that led up to, or rather totaled, 117,000. So the rest of them we can just enter their current pay period amounts. So let's skip that one for now. Okay, so let's do a calculation. So let's start with the limit, 117,000, and then let's subtract their beginning earnings. So when we do this math, we'll basically have the amount of this current period pay that is going to be liable for OASDI. So we see that only 6,100 of their 7,800 pay is going to be subject to the tax. So now let's do this math. Okay, so now let's put these numbers in. Make sure we got everything. Looks right. Okay, so now let's move on to Medicare. Okay, so we just see that all of our amounts are under the limit, so they're all going to be just at this 1.45%. So it's the same thing. We just take our rate. However, there's one change we need to make here, that instead of this amount, we're going to do the full amount here. So just make sure you're careful about the limits. Okay, so now let's copy the numbers over. So just a high level note, all these withholdings are part of these employee amounts that are due, because the employee is earning this amount in gross pay, but they owe all this stuff. So we are basically taking it out of their paycheck. So all these calculations are related to this employee part of the withholdings. So now let's just basically add up all these amounts to get a total withholding. So we take this, plus these are basically income tax withholdings, and also it looks like health insurance and United Way, which is a donation. So let's add all this up. And then add up this column. Okay, so now the net pay is going to basically be the current period minus the withholdings. So this 4,300 minus this. So let's just do the first one. So 4,300, 1,294.95. So what I did was I took this number here minus the total withholdings, and I got 3,005.05. And so I'm just going to do the same thing. I'm going to take this minus this, this minus this, and so on. Then I'll add up this column. And so this last column, salaries and wages expense, it's basically the same as this current period earning. Not sure why they put it in there. because for our business, we're still paying all this amount. This is all expense. However, it's not all going to the employee. Some of it is going to the tax authority because the employee also owes some money from their pay to these different entities. Okay, so let's check that. Okay, I'm good. Okay, now it wants us to journalize the wage expense accrual for the current period. So we're going to use the information that we basically calculated up here to do a journal entry. And we're just going to be basically using the totals. So this table helped us to do the per employee calculation, but for our business, we just really care about the total. So as I said before, the total expense of the business is basically the gross pay. So this 24,200 is going to be our expense because that is money that's going to be leaving the door. So that's our expense. But we have a number of items that this 24,200 will be distributed to. And so let's just go step through these. So we start with OASDI. We have Medicare. We have employee income tax, which is right here. United Way, health insurance, and let's see what else. United Way, health insurance, income tax, Medicare, and OASDI. So I think we have everything covered for the withholdings. So let's just fill in the numbers. So for OASDI, I get it from here. Medicare is this number. And I'm just going to fill in the rest. And then finally, we have net pay of this amount. So this is going to be the actual cash we're going to give to our employees directly. And so it's asking us to accrue it. So we're not yet paying it with cash. And so this is to record salary and wage expense. So let's just make sure all this adds up and prove it to you. So I've basically taken all these credits and added them up. And yes, it does indeed add up to our debit of 24,200. So this entry should be good to go. Oh, I made the memo wrong. It's not the cash payment. It's record salary and wage expense and payroll withholdings. Okay. Okay, so now it wants us to journalize the expenses for the employer payroll taxes for the current period. So this is, again, now shifting a little bit because all these taxes were for the employee. Now it's asking us for the employer. So we're going to have some extra stuff like the unemployment insurance, which we see here. So let's just fill out the accounts and do the amounts second. So the accounts are, I know I'm going to have payroll tax expense. That's going to be what we're calculating here. And there's going to be OASDI. There's going to be Medicare. There's going to be the federal unemployment tax. There's going to be state unemployment tax. And that should be it. Looks like we've covered all of the elements for the employer payroll tax expense. So now let's just calculate the amounts. So OASDI is actually the same. If you notice, it's the same rate as the employee. So we can just use this number. Medicare is also the same. Federal unemployment tax payable. So we read the details. It's 0.6% on the first $7,000 earned. So if we look at our employees, they all have much higher than a beginning balance of $7,000, except for this new employee. So we're only going to have to pay this unemployment tax on this new employee because we've already previously paid the tax for these employees when they first joined, and or rather at the beginning of the year when they were already paid their first $7,000. So this new employee is the only one where we have to pay this, and we're going to use this $5,500 and calculate the amount. So let's do that. So we have 5,500, and we have 0.6% for the federal and 5.4% for the state. Okay, so we have our amounts. So the federal is 33 and the state is 297. And so when we add all these numbers up, we get 2,075 and 90 cents. And so again, this is to record employer's payroll tax expense. And that's it.